Hey, this is Matt from InvestiQuant. Today is Wednesday, November 3, 2021. Today is the day of the FOMC announcement. That announcement will be out at 2 o'clock Eastern Time this afternoon, followed up by the press conference at 2:30 p.m. Eastern Time. So we're going to be looking at what has happened historically on this day, and we'll put it in a similar market environment and at a gap location like we are seeing or like is currently unfolding at the time of this recording. So let me go ahead and grab all four instruments here. The setup's going to be based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading higher, not significantly, but we are trading higher at the time of this recording, and gap direction really matters for this study. So I am going to go ahead and add it there. I don't know for sure that we're going to open up. So if we don't gap up, this is something you're going to want to come in and readjust on your own and see what happens with the down gaps and where exactly we're opening at that sort of location once you actually know. But since we're trading higher right now, I'm just going to add gap up here. Next, I'm going to go into indicators. I am going to say that we are above a 10 and 200 day simple moving average as we sit up at all-time highs. And then I'm going to go into the market events, and I'm going to say that today is the day of the FOMC announcement. It's right here in the middle. I'm going to grab that, hit equals next to it to add it, and it shows up in the header there once it is added. And now I can click View Results. All right, here we go. These are the results based upon entering the market long at the open of regular trading hours, 9:30 a.m. Eastern Time, and exiting at 4:15 p.m. Eastern Time when it is the day of the FOMC announcement and you are opening higher at 9:30 a.m. Eastern Time in a bull market environment. Historically, we've got 47 samples in the S&P dating back to 2003. We've got 51 for the NASDAQ, 40 in the Dow, 39 in the Russell. Win rates on these are weak for the S&P. The others are more neutral. So the NASDAQ coming in at 51%, the Dow coming in 45%, and the Russell coming in at 49%. But the ES there, 32%. So significantly weaker than the others. You can see the ES in that blue equity curve right here. You can see it is consistently working its way lower, and the others are a bit more mixed here. But the S&P significantly weaker than the others on the win rates. If we look at the average moves, average loss larger than the average win in the S&P. They're pretty similar in size for the NASDAQ. The Dow and the Russell both have larger average losses. It's kind of similar to the S&P. So historically speaking, this day has been weak for the S&P. The others is a little bit mixed, and the bigger moves have historically come on the downside on this day. And like I said earlier, the gap direction does matter on this day. The gap ups are a bit weaker, especially in the ES than the down gaps. I don't have time right now to dig into it, but if you have the platform, I encourage you to look at some gap fade scenarios. This is usually a good day for a gap fade trade, and a gap fade trade is a day where you enter the market in the opposite direction of the gap. So if you're gapping up, it would be a short. If you're gapping down, it would be a long, and you would be targeting the prior day closing price. You can do all of those types of studies here and Discover. And today on the FOMC announcement, you can usually get some really good results. So if you got the platform, I would encourage you to look at that or join me in the support room this morning, and we'll be looking at that specifically. So good luck today, and we will see you next time.